Welcome to my masterclass on mix and yield variances. For those of you who don't know me, I'm Jo Tuffle. I've been teaching on ACCA courses for 15 years. I'm passionate about supporting my students, and I'm a tutor with FME Learn Online, and I also have a YouTube channel. So if you want to take any courses with me, you need to go through FME Learn Online, and if you need any more help, then there is the YouTube channel, and this recording will be going up on there too. Okay, so we're going to start with material usage splits into the mix and yield variance. Now remember, the materials variance is a combination of the price variance and the usage variance. But the usage variance can be split into mix and yield. That's if you've got more than one material going into your product, which is normal. You have to calculate an individual usage variance for each type of material, but the product of materials making up a product can be then split into a mix and yield, so that all the usage variances added together can then be split into a mix and yield. The way I do it is I use this diagram technique. So we have a rectangle here, and on the top is the actual quantity and the actual mix. So that's the actual quantity used to make the number of batches or the number of units and the actual mix. Then on the bottom, we have the standard quantity that should have been used to make the number of batches in the standard mix. So basically, it's the actual quantity minus the standard quantity is the usage variance. Now, we then split that into mix and yield this way, using those triangles. So mix is the top triangle, and the mix variance will be the actual quantity in the standard mix minus the actual quantity in the actual mix. The yield variance is the bottom section, which is the standard quantity in the standard mix minus the actual quantity in the standard mix. So you're splitting the usage variance into two. So you should be using those 4 points, basically, in your calculations. Now, once you've found those differences in the quantities, you then cost them at the standard price. And that's what the usage variance is. It's the difference between the actual quantity and the standard quantity costed at the standard price. Now remember, the standard quantity is not the budgeted quantity. It's the standard quantity for the actual production. And that is the most important thing to remember. You're always looking at the actual production and what we should have used to make it. So I've got a narrative here to put this into practice for you. Carla's candles have ingredients of wax and fragrant oils, okay? And the original cost card is this. You've got 1.9 kilograms of wax and 0.1 kilograms of oil going into a candle. And there's the prices for each of the wax and the oil. So the standard is 2 kilograms of materials going into a candle. Now the actual amount of wax used was 5,200 kilograms of wax and 300 kilograms of oil. The budgeted sales volume was 2,000 candles, but the actual sales volume was 2,500 candles. They will always put the budgeted sales volume in your questions to trick you. You are supposed to be always crossing that out and using the actual 2,500 candles to do these questions. So we made 2,500 candles. It's no point in comparing something that you use, the actual amount that you use, to something that was budgeted to be a lower volume. You're going to get a nonsense variance. So you must start realizing that when you're doing cost variances, you need to make sure you use the actual, you flex it. Okay, so how do we put this onto my diagram? Notice I have crossed through that budgeted sales volume. We're going to be using the 2,500 candles. So firstly, actual kilograms of ingredients used was the wax and the oil, which actually totals 5,500. So that was the actual mix, the actual quantity, the actual mix. So 5,500 is the actual quantity. The standard mix we get from the cost card, which is 1.9, 0.1, and making up 2 kilograms. So that's your standard mix. Now the standard quantity is the tricky bit on here. Remember, you need to times it by the standard cost card. So the 2 kilograms to make a candle, and as we made 2,500, we should have used 5,000 kilograms. Hopefully that's clear. We're then going to cost it all at the standard price. So the first one we're going to be looking at is the mix variance. Now remember, you're going to take the actual quantity in the standard mix minus the actual quantity in the actual mix. You can see it on my diagram, and then times it at a standard price. So here it is again. You need to put it into a table. We find the actual quantity, which is 5,500, and we split that back in the standard mix. So to do that, you take the 5,500 divided by 2, which is the standard total for a candle, and then times by the 1.9 for the wax, and the same for oil. And then you've split that 5,500 back into the standard mix. The actual quantity in the actual mix was given to us in the question. And then now we get the difference. Now that needs to add to 0 because you're doing a mix variance. So the difference of 25 and minus 25 adds to 0 because all you're doing is comparing the two mixes. You're not looking at the change in quantity, you're looking at the change in the mix. And so it should add to 0. You're costing that up at the standard cost price for wax and oil, and then you find the mix variance. Now, the mix variance is therefore adverse. That's a more expensive mix because it's adverse. Help me out here now. What could be the reasons for this adverse variance? Could it be A, the prices paid for the materials were higher than standard? Could it be B, each candle used more of all the materials in the actual production than expected? C, the proportion of oil used relatively in production was more than expected? And D, less candles were produced than expected given the material input. So I've got a poll for you. Everybody's come up with a different answer. So let's have a look at the real answer. Okay, so the real answer is the proportion of oil used relatively in production was more than expected. Because this is all about a mix variance. It's all about the inputs, okay, not the outputs. So here, the mix of inputs is different to the standard. There's a relatively more oil and less wax being used. The variance is adverse as the oil is more expensive. This is a more expensive mix than standard. So remembering it's more expensive mix than expected because we were supposed to be using more wax and less oil, and we've now used more oil than wax, which is a more expensive material. So it's nothing to do with the quantities. So let's go through those answers that some of you put. Right, A, the prices paid for the materials were higher than standard. Remember, this is a usage variance. It's not a price variance. The material price variance would tell you that. The usage variance is always costed up at the standard cost. So it's got nothing to do with us paying more for material prices, okay? That's the price variance. B and D are basically the yield variance. So the same thing. Each candle used more of all the materials in actual production than expected. That is not a correct statement to make just because it says it's adverse. That's going to be the yield variance. D, less candles produced than expected given the material input. That's another way of deciding what is the yield variance. So the only answer is the proportion of oil used relative in production was more than expected. Hopefully we've learned that now. So let's now have a look at the yield variance. So now we're costing up what's going on the bottom of my rectangle, the bottom triangle. Remember, the actual quantity was 5,500. The standard quantity was 5,000 kilograms, and that was for 2,500 units. So we need to do the standard quantity in the standard mix, which would be that. You times the 2,500 by 1.9 will get you 4,750. And the 2,500 units times 0.1 would get you 250. That's exactly what we should have used to make the 2,500 units. The actual quantity in the standard mix we'd already calculated previously for the mix variance. So we're using that again. So you will be using the actual quantity in the standard mix for both the mix variance and the yield variance. That's the one that links the two. That's like the middle of the split, if you see what I'm saying. Okay, so let's now do the yield variance. So the standard quantity in the standard mix is there. The actual quantity in the standard mix, remember, we already calculated for the mix variance, but it's basically the 5,500 divided by 2 times by 1.9, 5,500 divided by 2 times by 0.1. That gives you the split in the standard mix. Then we do the difference, and again, we cost it at the standard price. Now here, this is adverse, 375 adverse. The mix variance was adverse, and so is the yield variance. It looks like we've used more of both wax and oil than we should have done to make these candles. Now, another way of doing the yield variance is the should and did approach. This is the one I would recommend for MCQs. 5,500 kilograms should produce 2,750 units because the standard is 2 kilograms. It did produce 2,500. So lost production is 250. And the standard cost for making a candle was 150, which you get from the question. So therefore, it's the same answer. It's 375 adverse. Now, a word of warning in questions, you must make sure when you're doing section C questions that you're very clear whether it's adverse or favourable. It's really important to make sure you write that properly. Don't just leave it as a negative. That's not going to help the examiner know what you mean, because the negative could actually mean a favourable because of the way you've done the question. So make sure you write adverse or favourable. Otherwise, you'll lose half a mark. So here, the inputs created a different output than expected from standard. The output is less than expected, possibly due to wastage or quality of materials, or even the change in mix. All right, so the whole point is this is all about the outputs. Each candle used more of all the materials in the actual production than expected, or less candles were produced than expected given the material input. Both are equally good explanations for that yield variance. Does everybody now see the difference between the mix and yield variance? Is everybody happy? I've got some exam MCQs now to go through, and then I'm going to look at a spreadsheet one. The first MCQ here is, what is the yield variance? Well, when we look at the question, they've given us some information about the 3 materials making up a micra. And then they've given us some information for period 1 for micra. A material usage variance is 100 adverse, was correctly recorded for micra. The standard ratio of mixing R, S, and T is 30%, 50%, 20. That all adds up to 100, so you can see those as percentages. And then it's given us some standard cost per litre, and then actual cost per litre, and then we've got the actual usage. The problem is it's asked us for the yield variance, But the information above only allows us to calculate the mix variance. Does anybody know why we can't calculate the yield variance from this information? No standard mix info. No, there is the standard mix info. You've got the 30, 50, and 20. Hasn't given you the standard cost, has it? Hasn't given you the standard cost card, effectively. I think that's what you're saying. For the yield, we'd need to know the actual units produced, and we'd need to know the amount of materials that would go into each of those units in total. That's the issue here, okay? So they're tricking you. What they're going to do is give you this information, and then everybody will use it to calculate the mix variance and then think that's the right answer, because that will be a distractor in the question. But what you've got to do is use this combination. Let's show you now. The relationship that mix plus yield equals usage. And they've given you the usage variance. So you find the mix and work backwards to get the yield by doing usage minus mix equals to the yield variance. We've got actual usage in litres. Right, and that needs to be put into the standard mix, then compared to the actual mix. And we need to use the standard cost per litre, not the actual cost per litre, remember. So again, there's another distractor there for you. And remember, you've been given the usage variance at the top. So once you find the mix, you can then find the yield. So we need actual quantity in the standard mix minus actual quantity in the actual mix at the standard cost. I'm showing you that I've done that here. The information in red is what was in the question. You can then use that information to calculate that mix variance, which is an adverse variance of 800. Notice I'm proving to you again that the difference in the mix should add to 0. So we use more of R&T and less of S. So the mix variance is adverse. If I tell you that the usage variance is 100 adverse, what is the yield variance, everybody? Does anybody want to tell me in the chat? I've had one answer in the chat. Fortunately, it's not the correct answer. So if the mix is adverse by 800 and the usage is 100 adverse, how do you get back from the mix to the usage? The yield is 700 favourable. What you need to do if you're not getting this right is to then do a double check. So it's easier to then say, right, have I got it right? Okay, I'm going to check now. 800 adverse plus 700 favourable equals 100 adverse. Do a sanity check to see if you've got it right. Okay, that is a question that has been put out there on an examiner's article. And obviously it was a very hard MCQ because they're giving you information to calculate one variance and then also putting that variance in the distractor. And so probably everybody got that wrong who hadn't seen that sort of question before. So now you've seen it, watch out for it, okay, and practice. Right, so it's another exam MCQ here. The following statements have been made about the materials mix variance for a company manufacturing different products using the same type of material. It's all measured in kilograms. Now, the mix variance can be calculated by taking the difference between the actual quantity in the standard mix, the actual quantity in the actual mix, and then multiplying it by the actual cost per kilogram. The mix variance arises because there's a difference between what the input should have been for the output achieved and the actual output. So which of the above statements are correct? Neither, both, one only, or two only. So I'm going to launch a poll again. So we're going to end the poll. 63% of you have gone for A, 25% for B, and 13% for C. Okay, let's see what the answer is. Let's look at number 1 first of all. The actual quantity in the standard mix versus the actual quantity in the actual mix. Well, that's correct. but then we're multiplying it by the actual cost per kilogram. That is not correct because we've got to multiply it by the standard cost. So that's not correct. Next one. This is describing the yield, not the mix. The material yield variance arises because the output which was achieved is different from the output which would have been expected from the inputs. So it's all about the output, that second one. It's saying that the input should have been for the output achieved. That is the yield variance. So basically, neither 1 nor 2 were correct. So well done those who got that right. And you're still learning if you didn't. Don't worry about it. You've learnt it now. Okay, we're going to have a look at another question now called Safe Soap Company. Now I'm going to do the yield variance on this presentation, first of all, in the should and did approach. And then we're going to go onto the spreadsheet and show you how to do these questions in spreadsheet in a concise and efficient manner. Safe Soap makes friendly soap using 3 ingredients, and we've got our standard cost there. The budgeted production and sales in September was 120,000 batches. The actual production and sales were 136,000 batches, and the actual ingredients used were as follows. So first of all, am I supposed to be basing my yield variance on 120,000 batches or on 136,000 batches? Which one should I be using? Anybody want to tell me in the chat? Brilliant. I've got 2 good answers so far. 3 good answers. So everybody knows when we're doing cost variances, you automatically cross out the budget because we flex the budget and then we calculate the variances. All right. And so the only time we would ever use the budgeted production is when we're using a sales volume variance. That's the only time you use the budgeted production, because when you're doing a sales volume variance, that's what it's calculating. It's calculating the change in profit or contribution from producing more or less than we budgeted. Everything else, every other variance has to be calculated based on the actual production. Otherwise, the variances are meaningless because they'll just be down to a volume difference. Right, so as long as we've got that clear again. So now we therefore need the actual used, which if we add those up, they come to 181,512. Because we're using the should and did approach, we need to know what the standard is per batch, which is 1.35 kilograms, adding those down. And we need to know the standard cost of making a soap. So we need to times out the lye kilograms by the price per lye, the coconut oil by the price per coconut oil, and we then add that up, and the cost per batch is 640. So now we have all the information we need to do the should and did approach. What should 181,512 produce? What should 181,512 produce? Can anybody got a calculator? They could tell me what they think it should have produced in terms of output. What do you divide that 181,512 by to find out what it should have produced? Excellent. Yeah, brilliant. You've got it, the 1.35. And then it did produce 136,000. So you compare the two, and then you times that by the cost of a batch. That's the should and did approach. So let me show you how that works. It should produce 134,453.33 batches. It did produce 136. So the extra production it's made more than we should have done, is 154.7. Now that's not the answer. A lot of people stop there. You've got to cost it up, remember. That's the quantity. Costing it up is 9,899 favorable because we're timesing it by the 640. So what we're saying here is each batch of soap used less of the materials in the actual production than expected, or more batches of soap were produced than expected given the material input. Both of those are valid statements to make. Now, obviously, the one that is more valid for you, because you can see it, is when you're doing the should and did approach, it's all about the output. More batches of soap were produced than expected, given the input. But if you did it in the table approach, you probably would have said the first one, each batch of soap used less of the materials in the actual production than expected. Don't worry too much about which one you're using. It's because of the way you are doing the calculation that those two statements don't seem to be the same, but they are the same explanation of the yield variance. You're either saying that you're using less of the materials than expected, or you're producing more batches of soap than you expected from the amount of materials that were input. They're both valid. Hopefully that's clear. I'm now going to go onto the spreadsheet and show you how to do it on spreadsheet, this question. So what I'm going to do now is calculate the mix and the yield variance and show you how to do it in the Excel spreadsheet. Now remember, if you're using my technique, you've got the actual mix, standard used for actual output, and standard mix, all at the standard prices. So for the mix variance, we're going to use the actual used in standard mix. So actual in standard mix, actual in standard mix, that's what I'm going to put there. And we're going to use the actual in the actual mix. You know what that means to you. Now, we've basically got the variance, and then you times it by the standard costs. So the standard costs we've got are 10, 4, and 3. Everybody see where I got those from, the cost card. We've got the mix over here, which is 0.25, 6, 0.6, and 0.5. And they all add down to 1.35, which is what you saw before. Now we have to complete this column first. So you would do this column first because you need to know what your total is. So if we put them in, it's 34,080, 83,232, and 64,200. Be careful about making sure you don't get any transposition errors, all right? So you put those in carefully and check. Now, the 181,512 is the actual in the actual mix, is that column. We need to split that back in the standard mix. So you equal that, because that's what you need as the total. And now you need to split it back in the standard mix. So you take the actual, you divide it by the total standard, and then you times it by the lie standard. That would be splitting it back for that one. You do the same for each of them. It's probably just as quick to do it each time because you can use dollar signs to fix cells, but I think in exam pressure, we don't want any mistakes when we actually do know what we're doing. Okay, so that's splitting it back. Check that it sums down yourself by putting the formula in somewhere else, and then you can check, and it does check. 181,512. Right, so this does obviously add to 0 because we're going to be using more lye and more cocoa, not oil, than shea butter. So that's adverse. Adverse means we're using more of it and we're using less shea butter. Costed it up, therefore means we've got an adverse mix variance. Tell them it's adverse. Give it a highlight, and then everybody knows that that's your mix variance. Is that a more expensive or a less expensive mix? In the chat. If we've got an adverse mix variance. More expensive, brilliant. So more expensive. And you can see it's a more expensive mix because, look, you are using more of the lye, which is expensive, and the cocoa compared to shea. So you're using more of the more expensive materials, and so it's a more expensive mix. That doesn't necessarily mean it's a better quality, by the way, because you're changing the mix using more expensive materials, but it may not mean it's a better quality. We would have to look at what's going on with the yield variance potentially to find out what's going on. So now, as you've already done that, all those formulas for one, time efficient wise, copy it and then label the yield variance and put it underneath. Now, you now then have to be really careful about relabeling. So we now need standard for actual output in the standard mix. So standard quantity in the standard mix, and we need the actual in the standard mix. Actual in the standard mix. Now, where have we already done this? Where have we already done this? This one. We've already done this. Do not repeat yourself. Copy it from the mix variance. So I'm now just going to copy that because I've already done it. There's no point in repeating it. See? Okay. And then it adds down, so that's fine. Now I need the standard quantity in the standard mix. So how many did we produce? So actual production, remember? Actual production was 136,000. You get it from over here, remember? 136,000. So 136,000 units were made, or batches were made. Now, the simplest way is to just times 136 by each of the standards. That's the quickest way. Or you can say what the standard quantity would be. So the standard quantity would be that times 1.35. So it's 133,600. And you could pop it in there. And then your formulas are automatically in there. And that would automatically break it back for you. So I'm going to do that. So it's 183,600. And it's automatically broken that all back for me. Or I could have done 0.25 times 136. So that's the unit, the batches. And that's the standard quantity. Standard quantity is at 1.35. Just to show you both ways of doing it. So just to prove that you could do it that way, then you could have just gone equals that times 136, and you still get the same answers you had before, 34. Just in case you don't believe me, I'm going to go back. And you still see it was already 34 as before. So you can either times that by the number of batches, or you can find the standard quantity, pop it in the bottom and break it back into the mix, which either way you find is the easiest way to remember what to do. I have now got a favourable variance, so you need to make sure you change everything. All this was automatically in there. Can you see it was all straight in there? I didn't have to redo any of my formulas. I need to just check everything's working. And now I've got a favourable yield variance. So what do we say now? Do we say we made less than the standard expected, or do we say we made more than the standard expected? What does that mean? Have we made more than the standard expected or less? I think everybody remembers. Yeah. So output from the materials input was more than expected. Or, as I said before, you can say we've used less. Can you see they're all favourable than the standard required to make the output? Or we've used less of the materials than standard to make the actual output. Either of those are perfectly valid. Hopefully, but clear. Now, I'm just going to show you, this is the mix yield and yield variance. They make a total of a usage variance. So the usage variance in total, if we add the two together, is 4072. 4072. That's the usage variance. And it's favourable. So overall, he's got a favourable usage variance. So that was by adding the mix and the yield together. One more time. Hopefully that's clear for everybody. But if you were asked to do the usage variance for the materials as a total without calculating the mix and the yield variance, you can't do it in total. You have to do it individually. You can only split the total usage variance into mix and yield. You can't do a total usage variance by adding up all the materials and then calculating the usage variance. That doesn't work. You have to do them individually. Okay, so you have to do them individually. So this is the point. You have to find the standard that lye should have used for the actual production, compare it to what they did use, and then cost it up. That is the usage variance for lye. Just so people get confused, that's the usage variance for lye. This is the usage variance for cocoa, and this is the usage variance for shea. When you add them up, the individual usage variances, that then gives you the total usage variance. And it's only the total usage variance which then gets split into mix and yield. Brilliant. Hopefully that's clear. Is it good performance? What do we think? Is it good performance? The production manager is pleased. I've made some changes to the mix of ingredients used for the soaps. The mix variance is adverse, but the favourable yield variance more than makes up for this. The changes made to the product mix are producing good results. Now we are able to produce more batches and meet the growing demand of our product. But sales manager has a different view. I'm not happy with this change in the ingredients mix. I've tried to explain that the quality of the soap has declined slightly, and some of my customers have realised this and simply aren't happy. Sales volumes are down. So is it good performance by the production manager? So the mix is 6,000 adverse, the yield is 10,000 favourable, and the usage is 4,000 favourable, therefore. Okay, so overall, the production manager is saying, I've changed the mix to a more expensive mix by altering it. I've put more lye in and I've put more cocoa oil in. And what that's done is created a higher yield. Well, the higher yield has come probably because the lye and the cocoa oil have made the mix go further. Yeah, they've produced more soap. That mix has basically yielded more than it should have done based on the standard. And so it looks like he's got a great favourable variance. His usage variance overall is 4,000. But when we look underneath it, it's because the mix has gone adverse and created a higher yield, right? Now, good performance, yes, if the quality of the soap hadn't changed. So what we've done is we've created a lower quality soap. It's basically probably weaker. It's gone further. So it's produced more soap. And so it's a bit like watered down the soap, shall we say. We've watered down the soap with more oil. And so basically that has reduced the quality. And so the sales manager has now been affected by something the production manager has done. The customers aren't happy. So it is a more expensive mix, which is yielding more, but there's a quality issue. The good performance for the PM, but it's had a knock-on effect to sales performance. Often in questions, you have to use the scenario to explain what's going on. In reality, sales volumes aren't always affected by quality. They could actually be something to do with competition or price or the market. So you can't say for certain it's definitely the production manager's fault, but there's certainly some issues here because customers are complaining. That's all I wanted to say. And these are my contacts. So you can WhatsApp me if you want any information about my courses. You can subscribe to my channel. I'm Jo Toffel Online Tutor. Connect with me on LinkedIn. Follow me on my Instagram, again, Jo Toffel PM Tutor it is. and like my page on Facebook, all on the social media channels. So hopefully you found this useful, and let me know any feedback you have.